Hi, good evening. You're watching Business Plus here on News 9. I'm Karthik Malhotra. Joining me in the studio, my colleague and friend Suyash Maheshwari. Big day today. A big numbers day with Maruti Suzuki's Q2 earnings report card out. And we are looking at Maruti zooming ahead in overdrive. What are the numbers looking like, Suyash?
Great set of numbers, Karthik. Maruti Suzuki has beaten the street's expectation on all fronts. Now, the India's largest car maker has reported the highest ever quarterly sales, highest ever net sales, highest ever net profit in the September quarter. Now, profit for the quarter stood at about 3,716 crores, about 80% higher than the year ago period.
80% higher,
80%.
Okay.
And even compared to our expectations, the profit figure was about 30% higher than what we were expecting.
Okay.
We had pegged the figure to come in at around 2,920 crore or something. The profit figure for in the past quarter stood at around 3,716 crores. So even across the spectrum of the expectations, it has beaten estimates on all fronts. Talking about revenue also jumped about 24%, almost 24% on a year-on-year basis. Revenue in Q2 stood at about 37,062 crore rupees versus 29,930 crore rupees. Compared to what the street was estimating, revenue figure was about 5% higher than street's expectations of about a figure of 35,218 crore. EBITDA, earnings before interest, tax, depreciation and amortization, stood at around 4,784 crore rupees, about 73% higher from the year ago period of where the figure stood at around 2768 crore rupees. Margin, on the other hand, expanded by about 360 basis points on a year-on-year basis. Margin stood at around almost 13% versus about 9.3% in the year ago period. Now, the company along with the results has said that the 80% rise in net profit was on the back of a lower input cost, given that the commodity prices has softened on a year-on-year basis. Non-operating incomes was also added to that the profitability figure. Its net sales has improved on a year-on-year basis, and also the cost-cutting initiatives undertaken by the company, in the last few quarters. These were the major driving factors as far as the profit beat was concerned. Revenue beat, on the other hand, was on the back of higher sales volume and better product mix. And talking about higher sales volume, in September quarter, Karthik, Maruti Suzuki sold 5,52,055 vehicles versus 5,17,395 units sold in September quarter of last year. Now, this is about a 14%
So what are we looking at? We are looking at least 2 million Maruti cars sold this year. H1, I remember, calendar year H1 closed at 1 million plus cars sold by Maruti. Now you're saying even the half-yearly Q1 and Q2, financial year half year, is also already in excess of 1 million.
I guess that's the expectation. I mean, 1 million in H1, about 500,000 here. Q3 and Q4 is overall, I think we can expect Maruti Suzuki to cross that mark of 2 million in the next quarter, given that the festive season is also about to kick in.
Absolutely. I want to speak to you about the festive season. The fact that last year's numbers, fairly high numbers, you're talking about 28,500 crore odd revenue last year, September quarter, when we were smack in the middle of festive season. This year, festive season is pushed to Q3.
Yeah.
And Q2 still has 37,000 crore rupees in revenue. I mean, Q3 is going to be bumper bonanza, isn't it?
I mean, if you look at the equation of revenue, P, price into Q, both have risen. Price across the board has risen for Maruti Suzuki, and quantity, we are seeing a 14% year-on-year jump. And mind you, this was despite not seeing that festive demand impact in September quarter, whereas we saw that rub-off effect in the year ago period. So I think on both fronts, price as well as quantity has contributed to that revenue beat for Maruti Suzuki.
Right. So I think the question that any retail investor and any consumer would want to ask is, you're talking about 14% volume increase, you're talking about 24% or so increase in revenue and 80% increase in profit, lower input cost efficiencies, pass it on to the consumers, isn't it?
I mean, that's something that the street, at least, I mean, not the street, but the customers of Maruti Suzuki would certainly hope for. But we are heading into the festive season, and as the
discounts are going to come in, pour in, little by little, trickle by trickle.
But that will be offset by the quantity increase that they are expecting. So pretty much Q3 is expected to be a good year. I mean, we'll hear more on that once the management starts talking about.
But congratulations to you. I think you've contributed to that revenue and that profitability figure. You bought the Maruti Jimny recently. I think
that's right.
Q3, if I'm not mistaken, you bought it only this year. But I think you will definitely add to the Q3. Interesting data point emerging that the Jimny is selling in half the numbers against its competitor Mahindra Thar.
I mean, I think initially the overall response, at least being a Jimny owner, one thing that I've noticed is that it's a clear head turner. Wherever I stop, people often come to me and ask, they have typically have 3 questions. How is it compared to Thar?
Kitna deti hai? Is that part of the question?
That is definitely a part of the question. I mean, the more discerning of the audience is asking that question. But pretty much the line of thought over there is ki at least it looks better than Thar. It's smaller than Thar. It's more practical than Thar, and price it's very competitive. I think it's priced lower than Thar. So overall, it's a more practical car in that segment where we only have 3 cars. I think it's Ford's Gurkha, we have Thar, and we have Jimny now.
Right. So just a disclaimer, Yash is not talking up the stock of Maruti. I think this is just friendly banter on account of Maruti results coming out. But talk to us, Yash, about how the stock has performed in light of the Q2 earnings, massive earnings, and help us draw a comparison with the peers, Tata Motors, Mahindra and Mahindra, etc.
For sure, Karthik. So Maruti Suzuki was trading higher. The expectation was that results will be good this time around, and the guidance also will indicate what sort of a festive demand we can expect going into Q3.
Okay.
So the stock was up about 2% before the results came out. It went on to surge as much as 4% to hit in the intraday trade post results to hit a record high of 10,845. Now, after that initial exuberance, the stock corrected and ended about 1% higher at 10,535 levels. Now, in comparison to its peers, Tata Motors and Mahindra, as you can see on the screen, on a 1-month basis, Maruti is up about 0.44%, whereas Tata Motors is up about 1%. Mahindra, on the other hand, has taken a beating, it's down about 5% or so. On a 6-month basis, it has underperformed Tata Motors but has outperformed Mahindra and Mahindra.
Yeah.
Mahindra was up about 22 to 23%. Maruti Suzuki, on the other hand, was up about 25%, and Tata Motors gave returns of about 30%.
So just help me understand, looking at this chart, it's interesting data. My assumption would be that Tata Motors stock has given over a 1-year period, over a 6-month period, over a 1-month period better returns because of its head start in the EV space, as opposed to Mahindra and Mahindra, which is still largely a diesel-oriented, diesel engine, powertrain-driven SUVs, and Maruti Suzuki at the cusp of petrol and hybrid.
Yeah.
So, looking at just pure that one single data point, it seems that the returns right now are directly linked with how future-ready an organization is.
Definitely. And also, I was also looking at the valuations, the PE, the price to earning multiples. I think Maruti is relatively overpriced over there. The PE multiple on Maruti currently, the 12-month forward PE is at around 33. Okay. Whereas for Tata Motors, even after the run-up that we are seeing, I think 54% jump in a 1-year basis, the PE stands at around 21. Mahindra is trading at a discount to both Tata Motors and Maruti Suzuki. It has a PE, 12-month forward PE of about 17.5. So Maruti Suzuki, yes, it is slightly expensive. Also, we have not really heard about what it's going to do as far as its EV portfolio is concerned. I think there is
there's a vision 2025, FY25, which will kickstart 1st April next year, 2024. So it does have plans to introduce at least 2 EV variants in FY25 and then build on that right up until FY30.
But I guess, as investors, investors in Maruti Suzuki, you would want more because it's India's largest car maker. Just 2 EV vehicles. How many does Tata Motors has? It has, spread its EV portfolio from affordable segment to premium segment. I think Tigor is the cheapest EV that's available, whereas Nexon is about 17 to 20 lakh rupees.
That's right.
So a good portfolio there, but Maruti Suzuki, of course, by the next year we could have or we should have two EVs from them, but I think the street is also expecting more from Maruti Suzuki as far as that EV portfolio is
Right.
concerned.
Since we are talking EV, since we are talking auto, not specifically auto stocks, but my question could eventually get there as well. Is that a new entrant? JSW chairman Sajan Jindal, now the very, very obvious front runner in the race to pick up stake in MG Motors. MG Motors has a great EV portfolio. So, is it going to eat into the share, not just the market share, into the share price share and the PEs of these existing players? How do you see the JSW story going ahead from here?
That could definitely eat away from the share, but if you look at the the entire market of the auto market, at least in the passenger vehicle segment, Maruti Suzuki has slowly and steadily been losing the market share to Tata Motors, to Mahindra & Mahindra. I mean, look back 10 years ago, Mahindra & Mahindra and Tata Motors did not really have a presence on Indian roads. In the last 10 years, they have come out with a bouquet of cars which are actively, competing with those foreign brands such as the likes of Hyundai, such as the likes of your Maruti Suzuki and other foreign players. So I think definitely, but it will hurt, I think, Tata Motors more if they are planning to, come out with their own set of EV vehicles. Maruti Suzuki, on the other hand, it's losing the market share very steadily, but I mean, once it comes out with the EV portfolio and it's a preferred choice for the middle class, Maruti Suzuki is a brand that has been around for the longest of time. So I think Maruti Suzuki should do well. I was also looking at the brokerage calls, by the way, on Maruti Suzuki.
Sure.
I mean, the last brokerage call came from Motilal Oswal in September.
Okay.
Motilal Oswal has a buy call on the stock and a target price of 11,900 rupees, which implies an upside of about 13% from today's closing.
You're saying it's already overpriced. The PE ratio suggests that the stock is already overpriced, and Motilal Oswal giving almost a 12,000 rupee target price, 11,900.
So probably they are buying into more that future vision that we were just talking about, the EV pack. Even KR Choksey expects the stock to, has a target price of about 11,170. It too has a buy call on the stock. So it also expects about a 6% upside from current levels. HDFC Securities also has a buy call on the stock. It has a target price of about 10,920, implying an upside of about 3.5% from current levels, whereas ICICI Securities has an accumulated rating on Maruti Suzuki with a target price of 10,923, same 3.5% upside from here on.
Excellent, super interesting numbers there. Well, I think let's drive out of this fast lane of automobiles and get into a slightly faster pickup on the broader markets today. So Yash, I think we had seen a great deceleration when it came to broad markets over the last 6 days. That 6-day bad omen, bad streak of ending in the red, the bloodbath, so to speak, has at least momentarily come to some sort of an end today?
Yeah, because yesterday was weekly expiry, so I think we saw a lot of short covering taking place in the last session, and Indian markets did in fact snap its 6-day losing streak, but in the last 6 days also it had lost about, Nifty as a matter of fact had lost about 950 points, about a 5% correction or so. It did, Nifty ended about 1% higher today, with the last day, by the way, also coming in above that 19,000 mark, which was a crucial psychological levels. I think we'll get to know whether this is a dead cat sort of a bounce back, or has the bearish sentiment after all reversed. Because
what's the dead cat sentiment? Just break it down for our viewers.
I mean, after a flash crash that we have seen, after you generally expect a bounce back from those levels. It does not mean a reversal in the overall trend, which currently, at least from what we can understand, it's bearish. It just means that market has been in an oversold territory. So perhaps some the investors are trying to catch perhaps a falling knife, so to say. But yeah, Nifty did end about 1% higher. Even the broader markets, as you can see, Karthik, on the screen, were very buoyant. Nifty Mid Cap 100 and Nifty Small Cap 100 ending with profits of about 1.5 to 2%. Also, I think the decline in volatility will augur well for the bulls. India VIX declined by about 7% or so, and settled at around 11.73% mark. Among sectors, as I can see, all sectors ended today's session in the green. Nifty Bank, which has been a laggard and has
up about 1.2%.
Up about 1.2%. The auto pack on the back of good
Maruti
set
results
of earnings from Maruti Suzuki also surged about 1.36%. The clear outperformer, as I can see, was PSU Bank, which was up about 4.2%. Again, on the back of good Q2 results from the banking pack overall, smaller bank as well as the larger private banks, and the media pack, which was up about 2.6% as well. Nifty FMCG, on the other hand, underperformed, and the pharma sector underperformed the broader markets as they were up about 0.7 to 0.8% compared to a 1% rise in Nifty. Now, what are the factors that are driving the markets? We have seen bond yields. We were just talking about bond yields yesterday. 5% we saw they scaling the 5% mark on Monday. Then it eased to about 4.8 to 4.82%.
Right.
Over the course of the next 2 days. Yesterday they had rescaled that 5% mark, and now they are again below about 8.
But I think 5 is a good average. 4.95, 5.05. I think 5 is a good average to assume that could be the yield for 10-year US Treasury bonds. Now, of course, those are not immediate factors which have driven the markets, but could be cues for the market to watch, especially in the light of more strengthening of the US dollar, pressure on the Indian rupee. So how do you see that story really panning out?
I mean, the Q3 GDP print from US was actually better than expected.
4.9%. I mean, who would have thought?
Yes.
And driven on the back of consumption, nothing less.
And that's a very, curious case that's playing out in the US. If you see, the economy has remained resilient. So Fed really can't cut interest rates, because then inflation would go up. And if it does not cut interest rates, the yields will keep on rising.
Absolutely. There's a catch-22 situation here.
Which will hurt the pockets of average Americans, because, Karthik, we also were talking about the mortgage rates. Mortgage rates have scaled a 23-year high.
8% or so.
8% or so.
I mean, imagine US lived in that era of free money that lasted almost forever. Anyway, let's take this conversation to Rahul Arora, Chief Executive Officer, Nirmal Bang Institutional Equities, joining us. Hi, Rahul. Thanks for being here on Business Plus this evening. Talk to us about US bond yields, the pressure on the Indian rupee, and potential outflow of money from Indian markets into the US Treasury bonds. How are you seeing this entire story pan out for Indian markets?
Thank you for having me, and apologies for being late for this interaction. So I think just taking forward from what you guys were discussing, I think when you look at the US economy, that is as strong as it is. I think if you look at the last couple of data points from the housing side as well, the pending and new home sales data, which you guys were discussing in terms of the US GDP numbers, the jobless claims numbers. I mean, it's ridiculous that the US economy should have been deep into a recession by now, but it's showing its fastest growth rate in close to 2 years. And this extends to the manufacturing side. I mean, I'm sure you guys saw the durable goods print that came out overnight. The expectation was for a 1.5% gain, and it grew by about 4.5%. So I think what's happening is, when you have an economy like the US that's growing at about almost nearly 5% annualized, it is only natural that you would probably take money out of other markets and put it into the US markets. And I think to that extent, you're seeing the kind of outflows, not just in the cash markets, but you're even seeing that in the derivatives markets in India. That's not to say that the India story is over. I think what we saw in the early part of this week was very welcome in terms of a correction, and I was hoping there was some more room to go for it. But, given that mortgage rates are where they are, given that yields are where they are, the US economy is still going from strength to strength. So, as on a lighter note, capital watch out. I think everyone in the world, including developed markets, are now competing for it.
Yeah, so capital watch out and potential flight of capital. Direct impact on Indian markets. What is your sort of horizon? How long should one wait and watch? And when would it be safe to assume that, okay, we've hit the peak of US bond yields, we've hit the peak of whatever capital outflow had to happen, has happened, markets have factored in all possibilities. How long do you see this horizon, this runway?
So I think the good part is that you do have a counterbalancing force in terms of domestic flows, right? I don't think we're in that situation where we were pre-demonetization, where FII flows was so relevant, because the size of the domestic mutual fund industry and the DIs was very, very small. Today, the size of the mutual fund industry is about 40 lakh crores, right? So even if they're sitting on aggregate of, let's say half of that is equities, which is about 20 lakh crores, even if they're sitting on about 5% cash, that's 1 lakh crores of cash at any point in time that just mutual funds are sitting on. Add to that insurance companies, LIC, AIFs, PMSs, etc.
Right.
You probably have close to about 2 lakh crores of cash sitting on, that you're sitting on at any point. So I don't think the Indian markets are going to crash. That is potentially ruled out. I think
Okay, let's
Russia,
not call it a
Ukraine.
crash, but any further correction?
Yeah.
Is there a correction that you are estimating, a number that you want to put to that correction?
No, so I think the way to look at it is I think it's purely academic to discuss a headline number for the index. But I think let's look at the early part of this week. If you exclude today,
Yeah.
stocks had come off 15-20%, right? So if I'm a holder and I was not able to justify stocks at price X minus 15% or 20%, I may choose to go in and buy. So my sense is, in a worst case on current evidence, 18,500 could be a reasonable floor on the Nifty. I'm not saying it'll head there. But that could be a reasonable floor. That being said, I still think there is room for valuations to reset on the way down. But like I said, I'm not calling for a major correction, just given the fact that domestic liquidity is still as strong as it is. But, hey, if your price comes through, please go in and buy the stocks by all means.
Okay, and US FOMC slated, I think, for October 31st, this Tuesday. Rahul, what are you expecting? I think there's a very clear understanding that perhaps this could be the pause in the cycle before one more hike next month. But then there are some views also coming in that perhaps US Fed may actually go in for one more rate hike this month itself. Which side of the curve are you on?
So honestly, I believe the discourse has moved beyond that.
Okay.
I think we are sitting in a regime where we accept, understand, and to some extent live with the fact that rates are going to be higher for longer. At our own firm, my economist does not expect a rate cut either by the Fed or by the Reserve Bank of India till the end of the first quarter of the next calendar year. So we're talking about somewhere around March, April of next year. So I think somewhere that has been factored into the bond yields in India, so also in the United States. But like I said, I think if you're going to get growth rates like, let's say the Indian economy grows between 6.5–7%, and the US continues to grow at an annualized rate of 4–5%, people are going to be paying for growth. And I think to that extent, if capital continues to move out of China, I think the US and India could be very significant beneficiaries.
Okay.
Of the same. So I wouldn't be too fussed. I think obviously if we were having this, but I think, it's purely academic now, whether they're on hold or they go in for another 25 basis points, because as you remember, just not even 24 to 48 hours back, central banks in the European region have started to hold. So
I was just going
even
to come
if you
to that.
hold, I think the market has sort of moved beyond that.
Exactly. So in Europe, again, I think ECB coming out very clearly and stating that it's not going to hike interest rates anymore. At the same time, this whole narrative of Eurozone going into recession, gaining wings, becoming stronger and stronger. Any solid impact that you are expecting on Indian markets with these two different sort of ends of the Atlantic, US continuing to grow, Eurozone going into potential recession? Overall, how are you factoring in the impact on India?
No, so I think the setup of both the continents is extremely different, right? I mean, I'll just go back to the conversation you guys were having before I joined in. I mean, just look at the home sales with mortgage rates where they are in the US. I mean, does it really matter that interest rates are that high? After all, if you're continuing to see, I mean, I was just reading a tweet recently by Elon Musk. And he said that there are no jobs available in manufacturing. He said, I need people, but I'm not able to find people. That's actually the resilient strength of the US economy. Europe, I think, is on a slightly different wicket. I think they have their own challenges to deal with. I think the kinds of challenges that some of the banking, majors are in Europe, I don't think some of those are as fragile in the US. So I think Europe has its own challenges. India, somewhere in the middle of this, like I said, I think if you're looking at developing markets or emerging markets, and the flight from China continues, I think you don't have an option as an international investor. Maybe Vietnam is one market where we've seen a lot of flows go in. So I think that probably is another market. But I think the two biggest stories for the calendar year 2024 in terms of capital inflows on a relative basis will be the US from the developed markets and India from the emerging markets. That's not to say that flows may not move from India to the US by US fund managers themselves. But I'm saying if I was a third party neutral where I had the whole world to invest, I'd probably pick US and India as my top destinations for developed and developing markets.
Okay, and let's come back to India specifically then. Big numbers today coming in from Maruti Suzuki. Before you joined, Suyash and I were talking about a 24% revenue growth YOY for September quarter and an 80% jump in profits. And we are yet to actually see the Reliance Q2 print, which is expected later today. So talk to us about Maruti Suzuki. Suyash was of the opinion that the stock is overpriced right now, but brokerage calls coming at an even higher valuation, going as high as 11,900 on the Maruti stock. How are you reading into the Maruti numbers?
See, as they say, beauty lies in the eye of the beholder. I see you're wearing a very nice jacket, and I'm sure, if you walked into the store and you really like that jacket that you have on, if the shopkeeper starts at 2,000, 4,000, 5,000, if you have the kind of money to pay for that jacket, you'd buy it, right? So I think, price is a very relative term. What's good for one may not work for the other. Fantastic numbers by Maruti, no question, not just on the top line, as you mentioned, but I think even if you looked at the operational performance, absolutely remarkable. My only concern is that I fear somewhere that FY24, the current fiscal year, could be the peak in terms of earnings for consumer companies across the board. Because I still think, and I have a very simple mathematical explanation to this. I mean, for most people that are in financial services that are, say, let's say drawing a salary of 24 lakhs plus, if you're, at a reasonable position or higher, when you go out for a weekend, you're probably spending about 10,000 rupees if you're doing a proper dinner, movie, a little bit of shopping and all of that, right? So that's about 40,000 rupees on a monthly basis that you're probably spending on entertainment. You annualize that, that's almost about 4.8 lakhs, and then maybe another 6 months of COVID. So you're talking about roughly about 7.5 lakhs of consumption that could have happened in COVID that actually didn't happen. Now, remember the second wave of COVID only ended in June of 2022. So there is still that amount of savings. When you multiply that into the number of people that would have saved that, I still think to a large part, this is a lot of that savings coming into consumption. And I think a lot of that may exhaust itself by the end of this year. I mean, the kind of marriages that are slated to be happening between now and March, and the commentary that's been coming out from the gold players is just remarkable. I mean, 30% kind of growth, and I was just reading somewhere just between November, December, only in Delhi there are some 3.5 lakh marriages. So I think consumption, we have a World Cup that's currently underway. We've just handed over the presidency of G20. So consumption is going to be fine this year, but my worry is that you're probably going to see the peak of it on most B2C companies. This would include automobiles, it would include consumer staples, it might include consumer discretionary. So fantastic on Maruti. On these numbers, would I buy the stock? Possibly. But I'd be watching out very closely to watch when the earnings cycle reverses.
Absolutely. So I think consumption being the big driver of Indian economy. And Rahul, before we let you go, we're talking about consumption. Let's talk about retail. And when we talk about retail, let's talk about Reliance Retail. Numbers expected later today, not just Reliance Retail, the entire RIL block Q2 results expected at 7 o'clock today. What are key expectations? It is a consumption story which is likely to play out there as well. In addition to that, there is this entire service economy on the back of Jio. How are you really looking out for Reliance numbers? Okay, I think we seem to have lost Rahul there. So Yash, coming to the end of this segment, pretty much 7 o'clock, any possibility of any sort of announcement around unlocking value through demerging of Jio, Reliance Retail, oil and gas, energy business? Too early?
Too early. I think we'll take cues from the next AGM only.
Okay.
So perhaps this year we are not going to hear anything as far as, demerger is concerned. But talking about Reliance Retail itself, has raised about 15,000 crores in Q2 from marquee players like KKR, Qatar Investment Fund, at a valuation of $100 billion. It's now, in terms of the valuations that these brokerages are pegging, it's valued more than HUL, it's valued more than ITC, it's valued more than ICICI Bank. So I think it's a time finally.
The time has come to unlock. Well, on that note, that brings us to the end of this excellent discussion we've had with Rahul and Suyash on markets today. Markets and the likely impact of what is happening in the world on markets in coming days. But let's move on. We're talking about Reliance. We're talking about Jio. Let's talk about another big event happening in New Delhi at Bharat Mandapam, where among other top players, of course, there was Jio and Akash Ambani there as well. I'm talking about the India Mobile Congress, inaugurated by Prime Minister Narendra Modi today. Before we move into discussing what IMC is all about, let's just take a look at some of the key voices at IMC 2023 and what really to expect from the entire mobile ecosystem, both products as well as services, going forward in India?
सैमसंग के फोल्ड 5 और एप्पल के आईफोन 15 पहले ही भारत में बनना शुरू हो गया है। आज हम सबको इस पर गर्व है कि पूरी दुनिया मेड इन इंडिया फोन्स का इस्तेमाल कर रही है।
मोदी जी का विजन है कि टेक्नोलॉजी डेमोक्रेटाइज हो, पीपल सेंट्रिक हो, टेक्नोलॉजी देश के आर्थिक एवं सामाजिक विकास का माध्यम बने। इसी विजन से प्रधानमंत्री जी ने टेलीकॉम सेक्टर को पूरी तरह से ट्रांसफॉर्म किया है। आज से 10 साल पहले अगर टेलीकॉम का नाम आता था तो एक अजीब सी भावना थी, 2G स्कैम की बात होती थी, लीगल बैटल्स चल रहे थे, इन्वेस्टमेंट कोई करना नहीं चाहता था।
Every generation needs a vision that inspires it to do great things. You have given my generation an aspirational vision of transforming our country into Viksit Bharat. If anyone wants to get a glimpse of how a developed India is being built, all they should do is come to the India Mobile Congress.
All right, so we've seen Prime Minister Narendra Modi, we've seen IT Minister Ashwini Vaishnav, we've seen Akash Ambani, but among other headliners, there was also Sunil Bharti, Mittal, Kumar Mangalam, Birla, all the doyens of telecom. Amit Ranjan joining me in the studio now. Amit, I think one critical aspect that got discussed at IMC today was India's potential leadership position when it comes to 6G. Break it down for us. What is 6G? What is it going to do that 5G is unable to do?
There is a term people use and we use in our daily parlance, quantum jump.
Okay.
Now,
wasn't 5G a quantum jump from 4G? Wasn't 4G a quantum jump from 3G? So
this is the quantum jump in the real sense of the word. Now, I'll just break it down. What 6G is promising is a jump in latency, communication latency. In simple terms, is delay or reaction time. We are in this preview in the area of milliseconds.
okay.
This promises microseconds. So the latency will come to 1,000th of a millisecond. Of a millisecond.
Okay.
That means it is 1,000th of a 1 millisecond thought-put. A thought-put in simple terms is if you think something and something reacts in 1,000th of a millisecond time. That is what 6G is promising. It will be a big quantum jump when it comes to imaging, when it comes to locational technologies, or all of that.
Okay, so break it down for me. You know, I'm a little slow on the uptake when it comes to technology. Basically, what we're trying to say is that when you're doing a video call, no more freeze frames.
No more freeze frames.
No more lip sync problems.
No more lip sync problems.
No more audio delays. No more call drops also when you're on data.
I'll give you a simple example because the World Cup is going on.
Okay.
People who are watching the World Cup on digital and who are watching it on a broadcast will see a little difference.
Okay.
So the updates that happen on your websites, one ball has already gone past from what you see on screen.
All right.
That's going to go away totally. It will be like that. There will be practically no delay in what you are watching and what is actually happening. I'll put it down when you said 5G was a quantum jump. 5G offers a peak data rate of around 20 gigabytes per second.
All right.
20 gigabytes and 1 terabyte. That's going to be the difference.
So 1 terabyte per second is the data transfer rate.
What 6G promises. So it's and quite a bit of these technologies, it doesn't matter, like I gave the example of cricket, but it doesn't matter if you're one ball late. But when it comes to reconnaissance and security services and all that, a little delay, a little whatever is...
Robotic surgeries for that
robotic
matter.
Surgeries, long distance surgeries, long distance medical services, all of that will basically, that again, coming back to that word, quantum, there will be a quantum shift. Certain things we cannot even imagine today. Of course, there were certain things we couldn't imagine 20 years ago which are happening today.
Right.
But this is going to be real. And of course, another thing, the caveat is it's still years away. But India does not want to be lagging behind in 6G. That is why I believe the push has started now, right from the top.
All right, the push has started right from the top, says Amit Ranjan, but there's another push right from the top, and that push is the succession at Reliance Industries. Remember, we told you Reliance results are expected later today at 7 p.m. But a closely associated part of that story is the fact that the Reliance Science, the sons and daughter of Mukesh Ambani and Neeta Ambani, will now formally get inducted as board of directors at Reliance Industries. And they have been given the go-ahead, the nod of shareholders of existing board of directors. And the little bit of glitch which was there around Anant Ambani's induction in the board of Reliance also seems to have faded away. So all three Reliance children, Akash Ambani, Anant Ambani, Isha Ambani, now have a clear green light to be board of directors at Reliance?
Yeah. Just for the sake of conversation, there is just a little difference in the acceptance. So 98% plus for Isha Ambani and Akash Ambani, close to 93% for Anant Ambani. So that is the only difference.
Right. So I think the debate that was raging back then was that there was a group of shareholders which had put some sort of an impediment in the succession planning of Mukesh Ambani, stating that Anant Ambani, at 28 years of age, doesn't have the prerequisite, or not exactly prerequisite, because Ministry of Corporate Affairs does not keep an age limit on the age of board of directors. But the caveat was that perhaps he doesn't have enough experience. Despite that, I think good news for Mukesh Ambani, for Reliance's energy division, which Anant Ambani is going to head. How do you see this sort of succession planning taking shape? We were just talking, Sayash and I were talking about the fact that maybe some unlocking of value by way of demerging existing Reliance businesses should happen. Now a very clear-cut sort of mandate that there is Akash Ambani who's taking care of the telecom business, Reliance Jio. There's Isha Ambani responsible for Reliance Retail, and Anant Ambani taking charge of the future energy, green energy business. How do you see this sort of unlocking of value as and when that really takes shape?
Taking off from what Suyash just told us, if Reliance Jio is valued more than HUL ITC, then it is time that there is
Reliance Retail.
Then it is time that it should be demerged and be listed separately. So I think that should be there. Also, coming back to Anant Ambani, going by Mr. Mukesh Ambani's word, it seems he has been spending a lot of time now in Jamnagar, taking care, being hands-on onto the business. So probably that convinced the people who were not so convinced about his candidacy.
Right. So good news coming there by way of the succession planning of Mukesh Ambani taking shape. But let's move on. Let's move on to another interesting story that we are tracking. And this one is coming by way of what is being referred to popularly as dark patterns. What are dark patterns? Honestly, I don't know too much about it, but we've got an expert who's done all the research on it, Odisha Srivastav, joining us on the show. Hey Odisha, thanks for joining us. Good to have you back with us. Dark patterns. Sounds really dark, sounds really mysterious. What are dark patterns?
It definitely is a very dark thing. So basically, dark patterns are these deceptive practices and these patterns that are deployed on the website. So for example, I'll give you an example. So let's say you are searching for a blazer on an e-commerce platform. Now when you are scrolling, and there is a pop-up advertisement that comes on your screen. Now that is a full screen pop-up advertisement.
Okay.
You spend 2 to 3 seconds to find where is the cross symbol. Why?
You're right.
Because you can close it.
Yeah.
Now it could happen that the pop-up is white in color and the cross symbol is also sort of white in color.
Right.
So now you spend some time spotting that. What that does is it hinders your UI UX experience, which is user interface
and accidentally looking for that cross button. Sometimes you end up clicking on that ad and it takes you away
to a different website you might be taken to.
So that's a dark pattern.
So that's a standard example you can see of a dark pattern.
Okay.
Sometimes it might happen that you are using something and there's a pop-up that appears on your screen. Now you cannot proceed without filling in the details that it is asking for. Basically what dark patterns do is they mislead you. They direct you towards a different direction.
How do they mislead you? I think if there's an ad on blazers and because you're searching for blazers, somebody has been smart to insert that ad there. Why is it really a bad thing?
It is because it is not exactly what you are looking for. It might be an ad, it could be a related ad, but this is not exactly what you want. Now the time that you are spending to search that blazer, you might say that, okay, I'll spend 5 minutes, but that might extend your time, hamper your internet usage and the consumption experience also.
Okay, give me another example of dark patterns. What else is dark patterns? So this is, okay, this is understandable. A pop-up ad which is linked to what you're searching for, difficult to find the cross button, is a dark pattern. What else is a dark pattern?
So a few months ago, I think the last month, Department of Consumer Affairs and the ASCI, Advertising Standards Council of India, they came up with certain terms that qualified as the deceptive dark patterns.
Okay.
Now what these are? Basket sneaking is one example. Now basket sneaking is one thing that, let's say you are adding items on your basket list, you're adding to the cart. Now one item is accidentally added. Now, you did not add it, but it got added.
Okay.
So it is called basket sneaking. Number 2 is called nagging. Now let's say a company is approaching me, an e-commerce site, let's say, is approaching me again and again asking me for a feedback. That's also a deceptive pattern. And then you can say then, you know, confirm shaming. Basically now here you are sort of, you know, somebody is asking you to, basically giving you a guilt trip, let's say. Let's say you're ordering something and then it says that, you know, let's donate 2 rupees to this NGO. That is like exactly, that's like confirm shaming. So these are certain examples and certain criteria that you can talk about, and that's one. Yeah.
Okay. So what is the government doing about it?
So as of now, we do not have a law that governs the usage of dark patterns and to combat something about it. So recently what the government did was, yesterday they started a hackathon where they are inviting ethical hackers. Now these ethical hackers would, you know, these participants would participate and they will, you know, come up with a software solution or an app, you know, sort of prototype, and then probably that we can use to, you know, combat these things. Plus the government has also you know, asked these companies to come up with, you know, self-regulatory norms. For example, what you do is when you are designing your website, make sure the you use ethical design guidelines. Number 2 is that time to time you are conducting independent audits so that you see that there are no dark patterns on your website. And number 3 is that they say that as a website, as a platform, as an e-commerce platform, it's your responsibility to tell your user that, okay, if you come across dark patterns on our website, then these are the tools that you can use. So basically user awareness is also that they have said.
All right, so building user awareness, building of course a case against the use of dark patterns, and really going after the developers and going after firms to make sure that their UI, UX and the codes that they, multiple lines of codes that they write are compliant to prevent dark patterns from emerging. Let's move on to something very, very interesting. We've just got about 2 minutes or so left on the show. Isha, stay with us and tell us, there's this beautiful term that you educated us on this morning called the Bechdel test. What is the Bechdel test and why is it that Indian films and Indian web series are failing massively at the Bechdel test?
Right. So let's start with what is a Bechdel test. So Bechdel test is sort of a litmus test, right? And it's internationally used where you identify that how the work of fiction, especially our films, are doing in terms of the representation of women. So Bechdel test has 3 criteria. Number 1, in a film, do we have at least 2 women characters, right? Number 2 is that, do these 2 female characters talk to each other? Number 3 is that when these 2 female characters talk, do they talk about anything other than a man or men? If a film follows, if a film is able to succeed in all these criteria, then
it passes the test.
It passes the test. Otherwise, it fails. So
what is the ratio? How many Indian films and web series have passed the test and how many have failed miserably?
So the Ormax Media has, you know, conducted a report in collaboration with Film Companion and Prime Video. And unfortunately, if we talk about the theatrical films, more than 50% of the films do not pass the Bechdel test. That's the status there.
So more than 50% of films may not have 2 female characters.
Right.
If they have those 2 female characters and there is a conversation that those 2 female characters are happening, they are talking about a man.
Yes. Yes.
More than half of films made in India. And web series, is the statistics any different for web series?
Yes, web series are doing better. So if we have some examples like Hush Hush, it's a web series on Amazon Prime. If we talk about Delhi Crime, the season 2 of the series. If we talk about season 3 of the Amazon's 4 More Shots Please, these series have very comfortably crossed the Bechdel test. And in terms of the trailers, in the trailers of these series, streaming platforms have done better because 33% talk time has been given to women characters in the trailers of the streaming platforms. But if you talk about the trailers of the theatrical releases, then only 27% screen time has been given to women.
All right, well, very interesting data coming there. Not good news for Indian films, definitely not good news for women empowerment that we talk about. We at TV9 Network, of course, have WOW. WOW stands for We Onboard Women. So if you come to our newsrooms, you'll find that we are going to pass the Bechdel test with flying colors. When we are on air as well, I don't think two women sitting on air talk only about men. I think we do far more serious stuff than that. But we are in non-fiction, we are into news. But I think some inspiration there or some sort of a wake-up call there for Indian filmmakers, for Indian OTT web series directors and executive producers to ensure that the empowerment of women is truly reflected in their films as well. And I think the mission should be to get to a 100% score on the Bechdel test. Thank you so much for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and